Good afternoon. I wanted to just give a very quick update on Bank Nifty as far as technicals and option data is concerned. Let's draw a resistance right now. This is the resistance that market was actually struggling to cross. From here, first time market sold off. Sellers were there and they sold it to 44,500. Buyers started buying and market started recovering. Again, second time market was pushed to the same level 44,500. Again, there was a buyers who defended this level of 44,500 to 60 Third time there was a sell off 2 3 4 days back, which was Friday. Again, the buyers came, defended this position. So this becomes a very strong support for us, which is 44,500. And now after 44,500 was defended successfully, market rallied up. We had resistance at 44,500 and then there was a sell-off today morning. This sell-off was actually not coming towards 44,500. That means the sellers are not so strong enough to push the market further down. And then we started seeing the recovery after HDFC Bank results today. This is what I see technically, and right now we are sitting at 45,000 plus. 45,000 was a struggle for quite a long time. We are right now trading slightly above 45,000. So let's see if the market can close above 45,000. If 45,000 and above, if it closes, it will be a very strong bullish sign. Now, if you look at RSI, RSI was finding support at this far at 40 levels. 40 levels. Today, RSI broke this moving average of RSI itself and started taking support at this moving average, which is a healthy sign. It is finding support above this moving average, which is again a healthy sign. So technically, it looks decent. Now, when we look at options data, we have to wonder whether the market can sustain and stay above 45,000 because that has been a resistance, a struggling area for a couple of days on Bank Nifty. Let's figure out how the positions are getting built up in options data just to see whether 45,000 can be at least broken today. If you look at this one, this is the resistance and support area is here. Highest OI bearish usually acts as a resistance for this expiry. So 45,000 is a resistance and highest OI bullish is 45,000, which is 45,000 support resistance. That means support resistance is the same level of 45,000. Is basically somebody is selling 45,000 call and 45,000 put. Now, if I look at who is stronger or who has a higher positions, 45,000 puts are people who want to keep the market above 45,000. They have almost 61 lakh positions. Whereas people who are trying to push the market below 45,000, who are bearish, they have almost 45 lakh positions. So, if you take a PCR of 45,000 alone, it is definitely in favor of bullishness, right? PCR basically puts to call ratio. If you take a ratio of 61 lakh positions at 45,000 bullishness, divide that by 45,000 bearishness, which is 45 lakhs. So 61 by 45 is definitely in favor of up move, in favor of bullishness. Take a look at 45,000. At 45,000 today alone, we have written almost 48 lakh positions, whereas at 45,000 call side, we have 17 lakh positions. If you see this one, this window, we had almost 34 lakh positions. From 34 lakh positions at 1 o'clock, now we are sitting at 17 lakh positions. That means 50% of the open interest at 45,000 calls were unbound today. So if you see this data and if you look at the puts at 12:48, 1 o'clock, 21 lakh positions were there, and now we are sitting at 48 lakh positions. So the option data is slightly getting into bullishness and put traders are coming and trying to defend the prices above 45,000. So option data is bullish and most likely we will have closing above 45,000. So that's the view that we have right now. So we have to be proven by the by the end of the day. Let's see how it works out at the end of the day. Having said this, uh, what can we do? Probably, if somebody who's a options trader, probably we can think of put credit spreads or call debit spreads. Basically, buying an in the money call and selling OTM call, 45,000 call buy or 45,500 call sell. So maybe this basically is called as a debit spread, or we can do a put credit spread, basically selling 44,500 put and taking hedges slightly below that. This is not a trade recommendation, but I would probably do something like this, right? Debit spreads on the calls or credit spreads on the puts, provided we have the closing above 45,000. Right now technically and as well as option data suggest a closing above 45,000. Let's figure out at the end of the day. Thank you so much, and I hope this helped. Bye bye.